Hi, this is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for Monday's show, May 17th. In it, I'm covering three markets: July corn, July soybeans, and August feeder cattle. I'm giving big picture analysis in all three. Just know that I cover all three of these markets on a day-to-day basis for my daily futures letter subscribers. I do offer a 2-week free trial. So if you're watching this video, you're probably at the website. Hit any free trial link if you would. I really would love it if you took my work for a 2-week, no obligation, no credit card, no payment information required, free trial. And you'll have unfettered access to all the work that I produce on a daily basis. It includes all the grains, livestock, crude oil, S&P 500, so forth and so on. And if you've had a free trial before, that's fine, as long as it hasn't been in the last 6 months. I do offer a new 2 weeks every 6 months. So if you've been there before, you're certainly welcome to come back. I'll call you during the 2-week free trial. We can talk the markets if you have any questions. And obviously, my end game is to have you become a regular monthly subscriber. So that would be great from my perspective, obviously. But, no obligation. I won't follow up with all kinds of repetitive phone calls or sales. I'm pretty no nonsense when it comes to follow-up marketing. You're either interested or you're not. Let's begin with July corn. And I can walk you back a bit here to December, when we had a long-term buy signal above this 464 and 3/4 long-term channel top. This is a weekly chart. Remember, it goes back to 2012, some 10 years. And this channel formation included sideways congestive activity that has spanned since really 2014. And having settled above in December, we really created a new floor for the broader corn market through the year, and really, I think, into later decade, perhaps. I mean, if we happen to retest this area at 464 and 3/4 anytime over the next year or so, and I'll get to that in a moment, it is one that can contain annual selling pressures, and above which my initial target has been or was this low 640s. 642 and 3/4, the 5/8 pullback, but really it's this 2/3 trend defining speed line that I've been watching all along. Now, we did settle above it a few weeks ago, and that then elicited the next 3 to 5 month buy signal to 834 and a quarter, which remains in effect above 643 and a quarter. Now, of course, we settled just above this speed line last week. This is a weekly chart, and as long as we continue placing weekly settlements above 643 and a quarter, there's really this market should regroup and continue higher, pushing on to new highs over the coming weeks. 834 and a quarter, a realistic, say, target by the end of summer, 3 to 5 months, possibly into autumn trade, where we can top out, at least on an annual basis. Now, along the way, I'm going to zoom in here. You can see that I've had 737 and 3/4 as an initial hurdle, and it did basically hold highs here recently. Going back a couple of weeks ago, we rallied to within a cent or two of it. And what I liked about this, and I was telling my subscribers at the time, it's a weekly containment level, and once tested, the market could fall back into the low 640s within several weeks. Well, it did so in a matter of days, actually. 737 and 3/4, if you zoom in and follow this chart closely, there's nothing really magical about it. It's just following the sequence of wave patterns. This market put out a low, rallied into the 740s, actually broke back, and this week was a reversal week. We put out a new high, settled below the previous week's low, and then the following week we gapped lower. So the market was obviously exhausted, and this was a pivotal week in that development. Up to that point, we were sort of in a congestive dynamic. And at this point, this was the timing of the actual sell-off, in my opinion. Now, of course, you could go back and make cases for other events, but as far as I'm concerned, this was a meaningful area. It's not a resistance area that I think can contain summer highs or even monthly highs, although that may prove to be the case. But it is one that can contain weekly highs, and once settled above, should set off follow through buying in the order of 3 to 5 weeks that we would reach 834 and a quarter. So if we can close above 737 and 3/4 anytime over the next few weeks, 834 and a quarter is then likely by the end of July or sooner, by July expiration. Now, downside, if we happen to close, and I'm going to say any day this week, by the time you watch this video, and by the time I'm on the show, I'm not quite sure what's going to happen here. I'm actually recording this on Sunday afternoon before the futures markets actually opened. So I'm working with Friday data right now. But if we happen to close below 643 and a quarter on Monday, then I've got a quick downside objective at 603 and a quarter, and we'll probably see this week. And this is nothing more. I can open this chart up a bit, and sorry about that. You can see this is the same weekly chart. It's just that I'm zooming in so you can take a look at what's going on. It's a projection of a trend-defining speed line off the April 20 low. 309 even was the lowest this market has been in some decade or two. It is the post-2012 high low. April of 2020 is a significant low, and we're using this high, this recent high, a couple of weeks ago at 735 and a quarter as the means by which we create the speed line. I can't really get into speed line construction because it would take another 10 minutes. But just know that, as I showed you before, we have good support at 643 and a quarter that can contain selling through summer, and above which 834 and a quarter remains a 3 to 5 month target. But I don't envision seeing this 464 and 3/4 long-term support level anytime soon unless we close any week below this rising 1/3 speed line. And this speed line is rising on a week-by-week basis, and it's climbing. The 603 and a quarter is rising and merging at some point in the weeks to come with this 643 and a quarter. So let me just finish with corn here. Bullish through summer above 643 and a quarter, or until we reach the 834 and a quarter 3 to 5 month target. And then we turn bearish really through summer and into autumn trade if we close below 603 and a quarter at the end of any week, then anticipating another test or a test of this 464 and 3/4 long-term support level. Let's move on to soybeans. Soybeans, if you've been listening to the radio show, you know I've had a 655 and a quarter now objective that I've been talking about for months. I've been talking 1650s. I said 650s, I think. I've been talking 1650s since the November buy signal above this channel structure. Now, this channel structure is not altogether different than what corn was doing on the previous charts that I was showing you. When it settled above 1132 and 3/4, we had 1655 and a quarter as our long-term target. It took 6 months or so to reach it. We reached it last week. The market backed off nicely. And now this new 1/3 speed line rising using the 2019 low against this most recent high comes in at 1381 and a quarter. It is our next long-term support area. And quite honestly, while my newsletter subscribers are made aware of these 3-star weekly support levels on the way down for near-term trading, I've been telling them that big picture, in other words, into and possibly through summer, we could trade inside the 1655 and a quarter ceiling to 1381 and a quarter floor. We could fill this wedge out for some months to come. But of the two, the stronger of the two is 1655 and a quarter. In other words, I've been telling people all along, it is an annual containment level. And once tested, we could fall all the way back to the 1132 and 3/4 formation over the next, I'm going to say, full year or sooner. That sooner would come much sooner if we were to close any week below this rising 1381 and a quarter speed line. And by the way, when July goes off the boards and is replaced by September and then replaced by November, all of those contracts will inherit these price points because this is a weekly continuation chart. So closing below 1381 and a quarter, the party is over, and expect 1132 and 3/4 over the following 3 to 5 months. Until then, we can trade inside this zone well into summer. Now, what if we close the week, this week, Friday, or any week, above this 1655 and a quarter long-term channel top? Then we have another 3 to 5 month buy signal. This is a monthly chart, not a weekly chart. As you can see, it goes back some 30 years into the early 90s. This is that 1655 area channel top that I showed you in the previous chart, but drawn on the monthly chart. And so if we were to close above 1655 and 3/4 at the end of any week, then we have another, I'm going to say 3 to 5 month buy signal that should take us into the 1980s. 1978 and 1/4 the month of June rises to 1982 even the month of August. Spread 2 months apart. You can do the math and ascertain where this long-term resistance is in perpetuity. So if we close above 1655 and 3/4 by at least a 1% margin, I must emphasize, then we should reach into the 1980s over the following 3 to 5 months, where I would anticipate the market could quite easily contain an annual, if not decade-long high. Finally, August feeder cattle. We've been testing this channel top here for several times over the last month and a half. When May was front and center, now August is the lead contract. August tested it. August tested it a few weeks ago. Came within 1% last week. This 154.12 resistance is our ceiling in feeder cattle, the broader market, through the year. It can contain annual buying pressures, and from here this market can rotate south, possibly much lower over the next full year of trade. FYI, the channel bottom to the channel top is at 100 even right now. I don't even have it labeled because it's so far off, but just know, if you're looking for big picture dynamics, like between now and this time next year, I wouldn't be surprised to see 100 even. Now, I don't have that indicated. It's fairly stair-step right now on the way down. At this point in time, I've got decent midterm support. This week at 140, 145, rising channel bottom combination speed line that has contained the lows pretty well over the last month or so. And I've been telling subscribers we can fill this wedge out all the way into summer trade. But at some point, one of these two is going to give. And I would have to say the likelier of the two is the downside one at 140, 145, because it's not as significant in terms of its time frame as with respect to the 154.12. 154.12 goes back 4 or 5 years. 140, 145 is only 1 year in the making. It can absorb selling on a monthly basis. We can trade inside this zone for a month or two to come. But if we close below 140, 145, then expect a down pivot into the 128, 129 handle. Bear with me here. I'm going to get rid of these cursors. If we close below 140, 145, August contract, at the end of any week, we've got 128.92 as our next target. And this level, this channel formation, can actually absorb selling into later year, possibly through the rest of the year, and is the point to settle below, for clearly indicating, in my opinion, that 100 support area, which is the channel bottom to the 154.12 channel top. So there you have all the downside. 154.12 is really the big picture pivot. It has pivot point qualities through the year, and below which we can head south from here over that time horizon. On the other hand, if we close above 154.12 at the end of this week by a 1% margin, and you can do the math, it's 154.12 plus 1.5412. It's going to be, what is it going to be? Well, I'll let you do the math. It's going to be 155 and change. Anyway, if we close above 154.12 by a 1% margin, then we're expecting bullish continuation into summer trade. The next 3 to 5 months, then expected to reach this 176.70 rising channel top, where we could actually top out not only through summer, but even through the rest of the year perhaps. From here, we could fall back to 154.12. But I must say that if we close above 154.12, that could have much longer term implications. I wouldn't be surprised to see the 220s over the following full year or two, following a weekly settlement above 154.12 by a 1% margin. Next quick target, 176.70, rising weekly, ultimately allowing the 220s over the next year or two of trade. And I do believe that that's all that needs to be said. Please take me up on my 2-week free trial offer. You'll get this and a lot more where that came from with regard to day-to-day analysis in all these markets and then some. Thanks for tuning in. So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose, and much to gain.